Well, I guess I'd say that there are probably four main topics that I'm hearing a lot from our clients in banking and financial services. And you can probably bucket them in two different categories. One is certainly around cost optimization more specifically. And this is one that we're seeing a lot of traction in probably the last 6 months in particular. And I think that's a result of the macroeconomic conditions that we see. Because even for retail and commercial banks who have benefited in some ways from higher interest rates, for example, on their net interest margin ratio, they're also going to see higher defaults and the general downturn in the economies of the major nations around the world mean that they have to do something with their cost base. So the focus on cost optimization in particular takes a few different forms, but one of them is most of these banks have already taken out the low-hanging fruit. So the question that they're asking for help with is, where should we look for sustainable cost reductions? Where are the areas across the enterprise that we can do that, crucially, without impacting customer experience? And that's where really we see that leap between cost takeout and the front end, digital customer engagement and the drive for growth, and that's the second bucket. So in particular, we have to help banks with how can they find different opportunities to reliably and sustainably take cost out of the business, whether that's from a process point of view, a technology point of view, even a people point of view, but minimizing that impact on the front end. And it manifests itself in several ways. One of them is that we see run the bank costs being scrutinized and reduced, whereas the change the bank costs and the transform the bank costs are being maintained, principally because the competition is so fierce in the market, they can't afford to get off the treadmill of transformation. And so those transformation budgets are often ring-fenced and protected. Of course, there's extra scrutiny on them. They need bigger ROIs, they need shorter payback periods, absolutely. And approvals are taking longer as a result. But nevertheless, that is revenue generating business and that has to remain. And so they're looking elsewhere. Some of the areas that they're finding cost savings in particular might be in operations, and specifically things like credit card operations and mortgage processing and payments, even core banking actually in some cases. But the reality is that improving those from a cost perspective can impact CX in the short term. So you've got to be very careful with the way that you do that. That's why so many of our clients are turning to expert third-party service and technology providers, as well as advisors such as ourselves, to help them to plot that journey. And I guess the final point that I would make here is that, from a revenue generation point of view, technology is really proving a huge enabler to most of our clients. And the two big areas that I see are the metaverse and banking as a service or embedded finance. And specifically that is trying to open up new customer sets and new channels to market using technology. In the metaverse, virtual real estate, for example, and mortgages in the metaverse and banking products in the metaverse is opening up new groups of customers for our banks. And when it comes to embedded finance or banking as a service, think of things like buy now, pay later. Every time you try and buy something, it says, do you want to pay in easy installments? This is how banks are reaching new customers through retail, whether that's online or in store. So those activities are definitely protected from a spend perspective. And I suppose to conclude, when we think about cost optimization, we think about people, process, technology, as I mentioned earlier. But one of the things that we see as a very hot topic is productivity, specifically the productivity of employees. And how do you ensure that you are measuring productivity? How do you ensure that you're improving output per employee or revenue per employee, as well as revenue per customer? And the obvious links between employee experience and customer experience have never been more keenly felt. So I think there's a recognition that if you treat employees well, you enable them with the right technology, then you're much more likely to get better outcomes on the customer end as well. So it's almost like a virtuous circle.